Hello and welcome to the stock market analysis. Today we're going to look at gold prices. So gold, as many of you know, is making new highs, new all-time highs. Let's take a look at the chart of gold. So without further ado, let's take a look at the daily chart of gold futures. It's not stock, which is something that I usually cover, but you can see it breaking up to new highs here. We just had gold breaking this downtrend line. You could say it's making it's a bit of a it broke above the downtrend line here, shot up and move higher. It recently had a 20 cross above 50 MA, bullish cross. And it is breaking above this, consolidation. Okay, here it breaks up a bit and then goes back lower, but generally it's breaking out this consolidation as it nears the rising 20 MA. So what we can do is we can take a measured move from here to here and project it upwards to get a possible short-term target. Okay, let me just remove the price scale lock first, and here you go. You can see that possible target is about 2355. Okay, 2355. Right, measured move is just a way that to project the target higher from a breakout, the lows of this breakout. Previous swing low here up to here, you project it upwards to get 2355. So let me just log back. You can see that gold prices are above the 20 MA, 50 MA, and 200 MA is of course rising, okay, which is good for prices, whether it's stock, whether it's commodities, whatever it is. When you see the shorter MA above the lower MA, the slower MA, and the 50 MA above the 200 MA, it tells us that things are quite good for gold. Now let's take a look at the weekly chart here. The weekly chart, we can see that it's forming some kind of a, if you will, a bullish flag, from kind of bull flag here, where it moved from here, and kind of bull flag here. And as it touched the 20 MA, it has a bottoming tail here. Okay, and this hinted that prices did not want to go any lower. Bottoming tails at weekly 20 MA are usually a very good sign that prices want to go up. So that it goes, it breaks up higher. Alright, and what is interesting as it is actually breaking out of long-term price here. Okay, let me just remove some of the drawings. Okay, this is a monthly chart of gold futures, and it's very important for us to look at gold futures, especially right now if you're an investor. Okay, this was a resistance area here about 2080. Every time it go up, cannot go up, drop, go up, cannot go up, drop, go up, cannot go up, but eventually it formed two bottoming tails here at the two monthly bottoming tails near the breakout area. And what does the bottoming tail tell us again? The bottoming tail actually tells us that price went lower, and somewhere to the end of the month it went back up higher. So price was rejecting to go lower two times. There's two bottoming tails that eventually break out higher, and these former highs here, once overcome, becomes a new support area, which is why I covered it in green. So the gold prices has already broke out above this trading this range here, and this area will be a new support. Now I want those of you who are investing in gold to pay attention, really pay attention to long-term support areas, especially if it's the monthly chart. Make no mistake, if gold has broken out of a significant monthly resistance, that area becomes a new support in area and you want to be buying gold, right, all the way, right, you want to buy gold breakout as long as it stays above this area 1980 to 2080. Okay, whatever the prices does, as long as it stays above this area, for the long-term investor is going to be bullish. Okay, this is not something that is that is of lightweight, but it's a heavyweight thing, right? You must give a lot of weight to it because this is a very, very significant area. Okay, yeah, gold can trade like this, drop, but sideways, but if it stays above this area, right, we are in new territory. And this was an old area here, about 1880. You can see that this area has also been overcome, and this area will be this old highs will become a new support area as well. Okay, so you have kind of two layers here of support. Of course, here is a support, here is a former high support, and you can see that gold actually made a bottom, rounded bottom here, broke out of this kind of like ascending triangle, if you will, in the monthly chart, and that is why it shoot up higher. Okay, investors can buy the breakout, put a stop loss here as it move higher. But what I want you to take note is that the 20 MA, monthly 20 MA, monthly 50 MA, and monthly 200 MA is rising. Now this is very, very significant for investors, because if all three moving averages are rising in the monthly chart, it tells us that gold, there is a very, very high potential that it's gonna go higher in the long run. You can see here, let's just look at history. Okay, during this time, back here in 2007, the monthly 200 MA is rising, the 50 MA is rising, monthly 20 MA is rising. And look, from here, from about 595, because the moving averages are rising, the gold went all the way up to 1900, right, before dropping back below 20 MA, 50 MA. So if history is of any guide, right, at least you can probably see gold going up to 2005, maybe even 3000. Okay, we just follow the trend. Okay, there is a significant breakout in gold right now. And should you invest? Yes, you should invest in gold, right, as a hedge against many things. Right, in the past, the intermarket analysis principle is that it's a hedge against inflation, it's a hedge against stock market crashes. But nowadays you can see a lot of things going up simultaneously. Okay, stock market is making new highs, gold is making new highs, Bitcoin are making new highs. So investors are no longer, in my opinion, you may disagree with me, that as long as something is giving them returns, right, they're not going to choose one asset over the other, because everything is going up. Okay, there is no inverse relation compared to the past. In the past, the stock market crash, gold market go higher, as a hedge. But now things are quite different, and that's something you want to take note about. So let me go back to the daily chart, and let me go to the hourly chart. Hourly chart, you can see that the gold futures has broken out above this trend line. Okay, it was correcting, trading at the 200 MA. Then it formed this reverse head and shoulders in the 60-minute chart, and from there it just bottomed. Now that is why it's important for us to look at 60-minute chart, because they often give us hints of where the market wants to go. And in this case, gold actually formed a reverse head and shoulders, and head and shoulders is bearish, but a reverse head and shoulders is inverse. it is bullish. So we have the left shoulder, the head, the right shoulder, and that is how it went up. Okay, and from there we have a bullish cross, and then ting tong, it broke above this downtrend line and is higher right now. So for short-term traders, you want to look at this area. Okay, this is a congestion area from a highs. As long as gold stays above this area, short-term you should be bullish on it. Okay, as long as it stays above this area and above the rising 20 MA and rising 50 MA. So there you have it. Here's the daily chart of gold. Now, things are bullish for gold at the moment. Stay bullish on the trend. The trend is your friend. Okay, if a trend in motion tends to stay in motion until it ends. So far, I don't see any weaknesses at the moment. So continue to stay bullish on gold in the long term, mid term, and also short term. So if you learned something and you found this analysis helpful, please like my video, share it if you want, and subscribe to my channel and for more analysis like this, and I'll see you in the next one.